Do you believe that Tesla's stock might double by 2023? The last year has been difficult for Tesla stock, and many people are hopeful that 2023 will be different. Experts, however, have differing views on this matter. Some believe the stock will keep declining, although others have suggested that it may actually double. You wouldn't want to overlook this information given that 2023 will undoubtedly be difficult for the EV market. We think Tesla's competitive advantage may grow. According to Jonas of Morgan Stanley, experts anticipate that in 2023, Tesla's earnings per share will increase by 40 to 5.66, while revenues will rise by 42% to $118.2 billion. Tempo, the period of triple-digit growth, and the notion of limitless demand that propelled Tesla stock for a long time may be coming to an end, according to experts. With 9 months of 2022 left, Tesla is still the leading electric vehicle manufacturer in the United States. According to data provided in November by SP, Tesla vehicles accounted for 6,525,000 registered EVs in the United States. Global mobility, to put things in perspective, the original Fremont plant has greatly increased production. It produces the luxury Model S sedan, Model X of E, in addition to the Model 3 and Model Y. According to Tesla, the Fremont factory has the potential to assemble up to 100,000 Model S and Model S automobiles annually, in addition to producing up to 550 Model 3 and Model Y vehicles. A more recent location in Austin is anticipated to hold 250 vehicles. As the plant approaches capacity, Tesla Austin is increasing the production of the Model Y, which should improve profit margins. When the truck goes online, which might be in the middle to late of 2023, Austin will produce the Cybertruck, but the frequently delayed truck isn't anticipated to contribute significantly to volume this year. As Bloomberg reported in late December, Tesla is also completing plans to construct an auto assembly plant in northeastern Mexico. Tesla's EVs has allowed the company to make significant progress in the U.S. auto industry, and the traditional automaker General Motors is producing the GM Bolt and Bolt Ev in decent numbers, but these vehicles are inferior to Tesla EVs in terms of price and features. Similarly, the Volkswagen ID.4 is currently being produced in Tennessee. Other legendary automakers are also gradually making their way into the electric vehicle market. But Ford Mustang Mach-E, Hyundai Ioniq 5, and Kia EV6 are intriguing crossover rivals to the Model I, but overall volumes are still fairly low. The reasonably cost-efficient SRX SUV is expected to hit the market by late 2023, while Ford Mach-E production is scheduled to increase in 2023 with its new Ultium batteries on the market. General Motors hopes to have multiple EVs available. Additionally, Ford wants to increase the number of F-150 Lightning pickup trucks produced annually to 150,000 by the autumn of 2020. Through November's end, the business sold 13,258 F-150 Lightning vehicles. The price of the entry-level Lightning has increased by 40%, $39,974 to about $56,000 due to successive price spikes. This indicates the popularity of the Lightning, as well as its scarcity and high battery cost. The end result is that while volume EV production, particularly of direct competitors to Tesla vehicles, may not occur until 2024 or later, overall, US auto production is expected to heat up in 2023. Chip shortages and other supply chain issues weigh used car prices, including those of the Tesla EVs, down. Despite this, experts anticipate a significant increase in Tesla sales in the U.S. the following year. New EV tax credits of up to $7,500 per vehicle from the Inflationary Reduction Act IRA income and vehicle price caps, however, could limit Tesla vehicles, and buyer eligibility. Eligible savings are restricted by the EV subsidies to cost of $55,000 or less. While ESS and pickup trucks are capped at $80,000, it's conceivable that Tesla will set a permanent price. US cuts need to be eligible for IRA rebates. Bernstein Stock and Naji noted that many prospective Tesla buyers have postponed orders or delayed delivery until 2023 because the EV credit only applies to vehicles built in North America, excluding imports. Like the Ioniq 5 and EV6 on December 21st, Tesla started to provide a $7,500 credit on Model 3 and Model I deliveries in the United States before the end of the year. This is an increase from the initial offer of $3,750. As an additional incentive, the EV giant is also providing free supercharger miles. While many believe that a charismatic CEO is a double-edged sword, experts believe that while Tesla had a terrible 2022, 2023 might not be any better. The leading edge maker had a difficult time on the stock market in 2022, and the pressure keeps building. Competitors are getting better. Consumers have less money to spend on vehicles, and Elon Musk is distracted by Twitter. Since Musk revealed his acquisition of Twitter in mid-April 2022, people's image of him has significantly changed due to his recent decision. Making abilities. Following years of poor performance, he emerged as the social network's leader, and as a result, Tesla, his shares have lost 62% of their value. Those who bet against Tesla stock were finally rewarded in 2022 with gains of $17 billion. According to the Wall Street Journal, after the tech stock plunge that started in November 2021 and Musk's diversion with Twitter. However, argue that investors should look past Tesla's present problems and concentrate on the greater picture. It is well known that in 2022, investors panic due to skyrocketing inflation, sending the stock market into bear territory. Raising interest rates and the possibility that the US will enter a recession are both possible, but there's also a chance that a bull market will start in the new year as a result of declining inflation, which could prompt the Federal Reserve to abandon its hawkish stance. As a result, it's possible that stocks will bottom out in the first half of 2023 and finish the year strongly, providing astute investors with a chance to accumulate a few strong businesses that could grow during the next few months. One such business that might profit in a bull market is Tesla. Although its shares have dropped 67 in the last year, average projections indicate that they may rise sharply in the upcoming year. According to a consensus of 36 analysts, the median price objective for Tesla stock is $250, which is $105 higher than the current stock price of the electric vehicle manufacturer. Furthermore, Tesla has a street high price target of $406, which could represent a 286% increase from current levels. It is important to note that despite the healthy demand for its cars, Tesla has been experiencing fantastic growth quarter after quarter. However, the company's shares have been adversely affected by the wider stock market sell-off. CEO Elon Musk's acquisition of Twitter and worries that demand for Tesla's cars is waning amid the macroeconomic slowdown. The most recent price of the company, China's cutbacks, have further undermined investor confidence. It is anticipated that Tesla will conclude 2022 with a 53% gain in revenue to $82.5 billion and a staggering 77% increase in earnings per share to $4. The firm is also anticipated to maintain its remarkable growth rates in 2023 and 2044. The 5-year prognosis is similarly promising, with Tesla predicted to grow its earnings annually at a rate of about 35% over the next 5 years. There are a few reasons why the company might see such phenomenal growth in the first place. The Tesla Model I and Model 3 are the top 2 best-selling EVs in Europe and China, which is the world's largest EV market and accounts for 2/3 of global EV sales, respectively. Tesla is a major player in the major EV markets throughout the world. In the US, Tesla holds an 8% market share. Although growing competition from both new and established players is likely to eat into Tesla's share in these markets in the future, investors should take note that the company is operating in a market that is built for secular long-term growth. From 2023 to 2028, EV sales are expected to clock a compound annual growth rate of 41, hitting 148 million in annual shipments at the end of the forecast period. In the first 9 months of 2022, Tesla was estimated to hold 65 of the EV market. Being among the first in this field, advantages that should help the business maintain its momentum in the face of escalating competition. The company's growing product line and production capacity, it has been rapidly increasing production, and as of the end of the third quarter, it had an installed annual vehicle capacity of nearly 2 million units. For additional reasons why Tesla's remarkable growth is likely to continue, the company can now enter more niches and solidify its position in the EV market overall, thanks to the introduction of new products like the Cybertruck and the Tesla Semi. The combination of Tesla's strong growth, potentially more optimistic stock market, and the share's attractive valuation could help these downtrodden electric vehicle companies soar in the new year and beyond. Make sure to subscribe to this channel for twice the Tesla stock update.